Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Today we have with us Daniel Ameduri, co-founder of Future Money Trends, FMT Advisory, and Crush the Street. He focuses mainly on inflation-related investments and strategies and has become a top resource expert for over 200,000 people who follow him at futuremoneytrends.com. And we are delighted to have him here today as a returning guest. Good day, Daniel, and welcome back to SBTV. How are you doing?
I'm doing great. Thanks for having me on the show.
Thanks for coming back. The Fed funds rate is tied to most forms of consumer debt. Currently in the target range of about 2.25 to 2.5%, which is still pretty low by historical standards, and even admitted by Federal Reserve Chairman Jerome Powell himself. Do you think the Fed is pausing rate hikes because they expect a coming recession, which will require them to inject liquidity again?
I do. I think that they're looking at the future and they're seeing that it's a very delicate thing they're dealing with. If they raise interest rates even a little bit, they could not only harm consumer spending and all this debt consumption that we're seeing, but it also could be a really big deal for the U.S. government because the U.S. government, of course, is one of the biggest debtors on the planet. And you raise the interest rates just a little bit, and you go from, let's say, 300 billion in interest payments to 400, 500, 600, maybe even $1 trillion in interest payments, and you can see how this thing can get out of control really quick. So I think they wanted to get it up high enough. The new normal of 2%, that's our new normal, not 6%. So that they'll probably be able to lower it and to do another easing. But I don't know, they're in a really odd spot because now they're really kind of damned if you do, damned if you don't.
Yeah, they are. But do you think we'll see the Fed cutting rates again this year? Or to rephrase the question, what do you see the Fed doing this year?
Well, it's totally speculative, right? But
Sure.
I do think they'll probably raise the rates at least once more, if not twice. And then we'll see what happens. I mean, look, 2019 is the last year before an election year. And then typically the Fed would go into a holding pattern. Market may even go into a holding pattern, just like it did in the 2015, 2016 timeframe. So we'll see what happens. Now, the only game changer is if the economy actually started to go into recession. The global economy looks like it's in recession, or at least going into recession, especially like China. But the U.S. does not have that same outlook right now. The U.S. is definitely much healthier than the other countries in the sense that because the debt obviously is keeping us propped up, but the job market is much better in the U.S. than pretty much anywhere else in the Western world.
Is it even realistic to expect that there's a chance the Fed is able to reduce its balance sheet to levels before the crisis of 2008? Or do they only have one path, and that is to inflate their balance sheet?
I think they have to inflate it, and it's because there's not a big enough buyer. The demand, where are they going to get the demand to take over this balance sheet? There's just simply it's just not there. Now with the treasuries they purchased, they could technically let them come to term, but again, I mean it's really it's a debt financed nation, and the Fed needs the inflation for the situation that the country's in. I mean, we live in a world of debtors. The biggest driver for inflation is going to be the U.S. government. Not only do they need the inflation for the stock market and for the economy, they need the inflation to pay back all this interest and all this borrowing they've done.
The debt, we're at 22 trillion now, and a new report by the New York Fed revealed that a record 7 million Americans are 90 days late on their auto loan payments, and it was the same picture with student loan delinquencies hitting record highs last year. How do you see the U.S. debt situation? Is it spiraling out of control, and is it getting worse, or do we have a chance to somehow recover?
Ooh, that's a good question. If we have time to recover, man, I literally just did a report on this about it's at futuremoneytrends.com/cash because this question that you have is really like one of the most important things that people need to consider because we are a consumer economy, we're a debt-driven economy. So if it's I don't know if it's spiraling out of control, but I think certainly it is getting to the point where it's as gone as far as it can. And I'll give people a great example that they can just easily understand. 1981, interest rates were around 15%. They're down to 2% as far as the 10-year. And if you consider that there's really nowhere else for interest rates to go. So they're going to go up, but they're really not going to go down. There's nowhere more room to go down. They're as low as they can go. So what's that going to happen to all the interest that has to service this debt when the debt's already maxed out? So you can see we're in a very, very bad predicament here in the U.S. As far as what could the U.S. do, maybe there'll be some sort of reset, or maybe some sort of debt reduction, some sort of quote unquote bailout. But that's only going to happen on the next crisis. But I guarantee you, the next crisis, all this debt is going to be a really big issue, because we've taken the economy as far as we can go. And you think about like countries like China, even all this debt consumption on commodities. Same thing for the U.S. All this debt consumption on all these products and stuff that are made from commodities. There's a lot of artificial demand out there. The demand is desirable by the marketplace, but it's not really. The money isn't there. They're just financing it by debt. So now that that's sort of hit a wall here, we're not spiraling out of control yet, but certainly that's going to be a huge headwind on the economy, because this economy is dependent on credit expansion.
Right. I I still see articles from time to time saying the national debt, it doesn't matter. Default, it's not imminent. U.S. dollar, it's the reserve currency. Don't worry. You can go to sleep at night, and everything will be okay in the morning. But is the national debt a cause for concern, or have we've become immune to increasing debt as it's kind of numbed our senses in some way?
For sure, it's numbed their senses, and we need it when we just look at that one problem. You can see how big of a problem it is. But then we need to step back and look at, why is it not the only problem, or why is it not the focus on the world marketplace? Well, first of all, most of the countries that are the alternative currencies are not that great a place. People do not want to put their money in China. They don't trust China. Granted, whatever all the problems we have in the United States, people do trust that, you put your money in the bank and the bank's not going to outright confiscate it. Could that happen? Sure, but it's most likely not going to happen without some sort of crazy crisis. The EU, the euro's a basket case. So right now the dollar relative to the other currencies is the best one. And as far as the U.S. specifically, its national debt, same thing. The U.S. has incredible assets. It has a military. It has its influence in the world through the military and the bases. It's got 4,000 nuclear warheads that the dollar is backed by. It's got a lot of national treasures. So if you looked at like the assets of the U.S. government, let's say it owns a massive chunk. I think like 80% of Nevada, owns massive chunks of California. So there could even be a case made that relative to the assets, that the debt isn't that big of a deal. So you just have to put it in perspective. If you just look at the national debt, you see a crazy crisis. But then you start looking at the rest of the world and relative. We always say the dollar's not backed by anything, but come on, technically it is. It's backed by the U.S. military, which is very influential in the world, for better or for worse, whether you like it or don't. It doesn't matter. It is what it is. The U.S. has guns and soldiers all over the world, 133 countries, and that means a lot of people might be inclined to use the dollar. There are countries, like I think there's about 30 of them, that literally just use the dollar. I went to Panama last year, and it's so easy for an American. You literally use the U.S. currency, and there are another 29 countries that use the dollar for that purpose.
Okay, it's pretty interesting. But is there a political will in the current administration to solve this debt issue, or will they have to pile on more debt as what preceding administrations have done? And when we look at just the prior administration, President Obama, I believe he racked up more debt than all previous presidents combined.
Yeah, and that was true for Bush as well. Can you believe it? So from George Washington to the end of Bill Clinton's term, there was $5 trillion in debt. Bush went from 5 to 10. Obama went from 10 to 20. It's amazing. So we're now at that exponential point with our national debt. As far as is there a political will, I think there's the political will in a crisis by any administration, especially this one. Um, and I think if there was a good crisis, they probably actually might be successful in restructuring or doing something about the debt. But is there the political will when the stock market is making new highs and unemployment, even if it's fake, is at 4%, and let's say the real one is at 8%, things are going too smoothly for any politician to mess with this. The thing is, as you know, it's like somebody who started using heroin today. This time next week, it's almost like normal filling. But we know where that goes. It goes to devastation, very unhealthy life. And a lot of people think we're living in a normal life. We are living in a parabolic move on debt, and that is not normal. But for President Trump to deal with it would be political suicide, because everybody, the all this debt from Obama and Bush and everybody else would be dumped on him. It would all be Trump's fault.
Yeah. How do you think Trump administration is faring so far in terms of improving the economy and increasing opportunities for its U.S. citizens?
So I've talked to so many business owners, both in the public markets and private, and with certainty, I can tell you Trump has helped the economy from the rollback of regulations. I talked to so many people from California to Texas, whether they're in the oil markets or cannabis markets, this rolling back of regulations, specifically when it comes to the natural resources, making it to where it took 10 years to mine something in Nevada to now it might take 3 or 4 years from discovery. I mean, just cutting that time is increasing the flow of money, the flow of goods, the flow of hiring. And I have no doubt that between the tax cuts and the rolling back of regulations, if he just did those two things and left, he's probably bought us another 5 or 10 years.
Yeah, I I want to circle back a bit. We touched on if we have enough time to recover. If we don't, what do you think it's going to look like?
I think the initial phases, if there's a crisis, specifically with the dollar or the national debt, it's kind of hard for me to picture, because I just look at the rest of the world. I think they're just going to, if there's a crisis, they're going to start buying U.S. stocks and the U.S. dollar, just because it's right now it's what's safe. But let's say we went into a severe crisis, which I definitely see happening, but probably not for 10 to 15 more years. A big crisis happens with the U.S. currency specifically. I think you have a worldwide currency crisis because of the dollar. People aren't going to trust the euro. You're not going to, be unhappy with the dollar and then panic into the peso or the yen, the renminbi. I think that's where gold is going to have a huge presence, and where gold's really going to have an importance is with the large institutions. You're going to see them go from owning basically nothing to, let's say, 5 or 10% or maybe even 15% during a crisis. And that flow of capital, I've talked to Doug Casey about it. He describes it like the Hoover Dam going through a garden hose. You can imagine that pool of capital sitting worldwide during a currency crisis. And the first thing anyone thinks of when they think of a currency crisis is gold. And so now think about the whole world trying to buy gold. And that's where you could see a huge revaluation of the gold price and some systemic problems in the physical gold market, because I think there's a lot of games being played in actually who owns the gold. Is gold being triple leased out, or is the gold even there in some cases from some of these vaults?
Since we're on the topic of gold, what's your outlook for gold and silver in 2019? Do you think we'll see stronger prices this year? It's been pretty volatile already.
Yeah, I'm very optimistic. I think gold's going to hit 1,400 rather quickly here. I am very bullish on both the precious metals. Palladium, we were bullish on, but we actually just told everybody to go ahead and close out that position. Even though it could definitely run higher, we know how things go. But look, let's not be greedy. It's more than doubled, and palladium is now 1,500 bucks. It's worth more than gold. It's worth more than platinum. Could it go to 2,000? Sure, but you're better off selling your palladium and buying some silver and buying some gold. Gold is leading. Gold is hitting all-time highs in roughly 70 currencies. And it's about this. I don't know if they can see me or they're listening to me on this, but I've got my fingers about an inch apart. So just for people who are just listening to this on audio, we're so close to a 52-week high, a new bull market high for the current cycle we're in. Gold bottomed at 1,041 in 2015. Once we hit about, I think it's 1365 or 1375, that's a new bull market high. And I think that is probably within weeks away.
How do you view the reports of increasing gold purchases by the central banks? Why do you think they're piling on gold at this point in time?
I think the central banks, unlike us little guys, where you're looking at your lifetime and you want to hold 5 or 10%, a lot of these sovereign wealth funds or central banks, they're looking at things in 100 years. So where we're maybe trying to prepare for what's going to happen next year or what's going to happen over the next 5 years, the central banks with certainty know that there's going to be a currency crisis. They don't know if it's going to happen in a year from now, 5 years from now, or 50 years from now. But they know with certainty that it's going to happen. And that's why they're accumulating gold. And I think the fact that they're increasing their purchases now probably is a good indicator that they don't think it's going to be in 50 years, that it might be in less than 10, less than a decade, or imminent. But for sure, to see them purchase gold like this is definitely a red flag for everybody who's involved in the currency markets.
Daniel, I know you're one of the top resource guys. How do you interpret the recent merger of mining giants Newmont and Goldcorp with regards to the state of the gold market?
I think we're going to see a lot more, and I think this is a classic sign of an early stage of a bull market. We've seen all these companies in the gutter. The supply line has collapsed. The exploration has collapsed. Nobody's investing in it. And now you're starting to see these bigger companies come together, not just for survival, but because out of necessity, they have to do this. They don't have a choice. And this is a classic sign. It's a great setup for a long-term bull market. I think the next bull market in gold, it won't be like 2016 where it lasts for 4 or 5 months. I think we're looking at something that's going to go for 4 or 5 years, maybe even 10 years.
We've had a few guests who have come on the show, and they said we're at peak gold now. What's your view on this?
To me, it's obvious that it's there. Even Goldman Sachs, who I'm not a big fan of, they came out with a big report a few weeks ago, and then actually a few years ago, they were showing that it looks like it was possible, and it looks like it's happened. So the production of gold has flattened out, it's plateaued. But the real shocker for people, if you really want to know why it's a great time to invest in gold, there hasn't been a major discovery in 20 years. Think about that. 2 decades, no major discoveries. And if you look at a chart, Goldcorp had it about 10 years ago, it showed the spending for exploration was going way up, but the results was just collapsing and getting lower and lower. And now consider that we've been through this downturn from 2012 to basically 2016, 2015, and no money was being invested. So now you have huge pipeline issues of future supply. So not only is production plateauing and the mines that are producing, they have to go further, deeper, it's lower grade. But think about future gold production. No one's been investing any real money in exploring for gold, for the last 5, 6 years.
Okay, and so for those of us who have been in precious metals for a while, if gold should hit 5,000, what do we do? Do we buy some more? Do we sell it? I know it all depends on what's going on in the world at that time, but what do we do when gold's at 5,000?
Well, if it goes to 5,000 and it has a run like palladium, where you're still going to Starbucks in the morning and watching Netflix at night, and life is pretty much normal for you, and it's at 5,000, I'd sell it and I'd flip it into silver or buy some rental properties. But look, if it goes to 5,000 because there's a severe currency crisis and the dollar's on its death throes, I think you have no choice. You need to hold the gold, or perhaps buy more even, or use the gold to convert it to something that has collapsed. So let's say gold goes to 5,000 because interest rates went to 6%. Well, there's a good chance that gold goes to 5,000 and a nice piece of real estate in California is down 50 to 70%. And then it's a no-brainer Would you rather have a VHS size gold bar, or would you rather have a rental property? I'd rather have a rental property. Remember, gold is really not an investment. It's money. It's a store of value. It's where you want your wealth preserved between investments. For sure, we're buying gold right now for safety and protection, and it will do its job. But when it's done its job, try not to get into that mindset where I'm just going to hold because it's going to go to 30,000. Look, if there's opportunities to convert your gold into a producing asset, why not? Why not do that? But again, I'm a big believer in always holding some gold. I believe at the minimum you should have at least 5% of your net worth in gold. But I mean, I'm more comfortable with probably 10 or 15%, to be honest with you. But that's my personal preference.
How about silver? How are the fundamentals of silver? Is it still good? Is silver a good asset to accumulate?
The fundamentals for silver are much better than gold. There is less silver above ground. From the Earth's crust, it's about a 1 to 10 ratio, 10 ounces of silver to 1 ounce of gold. It trades over 80 to 1 right now. It takes 80 ounces of silver to buy 1 ounce of gold. I'm not big into the ratio where the historical part is, but just looking from Earth's crust to what it trades for is significant. And then actually what's above ground, there's about 1 billion to 2 billion ounces of silver that are above ground and available, but really less than 1 billion that's available because let's be real, if it's been turned into an American Eagle, no one's going to melt that down. Unless silver gets to $1,000, no one's melting down American Eagles. So, people always say there's 2 billion ounces of above ground silver, but like half of that is investment silver. So I always say that's not really available because no one's melting American Eagles or Canadian Maple Leafs. And there's 5 billion ounces of gold above ground. So there's actually less silver than there is gold. And gold, when it gets mined, it gets pulled out of the ground and it gets thrown into a vault. When silver gets mined, it just goes away. And what I mean by that is, let's take solar panels, for example. 10 years ago, this wasn't even a reportable event in silver. Now it's like 150 million ounces a year in an 800 million ounce market. And California just passed a law, which has 39 million people, that all new homes starting on January 1st, 2020 will have to have solar panels. So the demand for silver will continue to surge higher, but silver shows that same, that peak, just like gold. And consider that the cost of silver might go a lot higher as energy costs go up.
Yeah, 2020 is not too far away, and with hearing all of these things, I would suspect there are going to be quite a few new people coming into gold and silver. What will be your advice with regards to the types of bullion to buy, bars or coins?
It's a great question. So for those of you who are new to gold and silver, I just like purchasing straight bullion, closest to spot rounds. But if you've got a little money and you're not trying to save, go with the American Eagles or the Maple Leafs for both gold or silver. And then if you're a gold bug and you've been involved in the gold market for a long time, because I would never recommend anything this to anybody, and I would say this is a scam for the most part. But right now, there's a rare opportunity in the gold market specifically where the numismatic gold coins, these are your 1933 type gold coins, they actually trade for just like a hair over the Eagles. So let's say gold's 1320 right now as we do this interview. You could buy an American Eagle gold coin for 1370. You could buy a numismatic coin for like 1380. And the reasoning why I would buy the numismatic is because when there's a great bull market and when gold is moving higher, these coins can fetch a 25 to 50% premium. When gold hit 1,000, the numismatics traded for 1,500. So that's the only reason why I buy a numismatic, because it's almost buying the same other coin, the regular ones. But in a bull market, you're never going to get less than the regular ones, but you might get a lot more. So, but I don't want to complicate that for anybody who's listening to this and is new to gold. Forget about the numismatics, especially if you don't know the bullion dealer. These things are more in the collector item category. But if you're sophisticated and you're familiar with gold, buy the numismatics right now because you're paying like 10 more dollars. Why not? The downside is the same as the American Eagle, but the upside is, you've tagged on this extra little side bet. And look, if the numismatic doesn't get premium, who cares? You're still going to get the same ounce. But I think it is going to get that premium because when gold is popular and fear is high, people start to get concerned. And a lot of people will buy these numismatic coins because they see the collector side as a protection. Because when FDR confiscated gold, they didn't confiscate collectibles. Why would they? They're collectibles. So that's why a lot of people actually will buy the numismatics during a panic because they're worried about gold confiscation.
Okay. And I know you're pretty familiar with the mining sectors. How are things looking for miners right now?
I think the mining stocks will have their day in the sun. I think it's going to be a few months away here because I think a lot of people are doubting it and not believing it. They've been burned so many times. Institutions aren't really involved in it yet. It won't take much though. We covered a company that we're very close with. I do business with them, and it just took a little bit of buying, and the stock went from 20 cents to 40 cents. So you can imagine once institutional money comes in or pension funds come in, it's not going to take much. And when I'm talking about a little, I'm saying like $500,000 in buying. Imagine when tens of millions of dollars hit this sector, billions hit this sector. You're going to see these things go vertical. And right now they're at great valuations. The good thing about the mining shares is because the CEOs all went through hell from 2012 to 2015, they're very prudent. They gorged themselves on capital in 2016, but they didn't blow it like they did in 2010 and 2011. They had like post-traumatic stress. And so a lot of these companies raised like, let's say $10 million in 2016. Their cash position today is like $9 million. They barely spend any money because they're so damn scared, which is good. We want our CEOs scared to spend money because we want them to be very methodical about it. We want them to be like snipers when they spend money because otherwise this business, my goodness, a lot of money can be wasted on projects and overpaying for assets and exploration.
Yeah, I hear you. One shot, one kill. But gotta ask you, what's on your radar, short term and long term?
So I mean, for the precious metals, I'm very excited about physical silver. I like gold, of course, for wealth protection, physical silver, and then the mining shares. There's a handful. I'm a big believer in just owning a few. A few, maybe one or two silver companies, maybe an exporter and a producer, and then maybe a few gold companies. I love the gold optionality plays. These are companies with a large gold asset. They're never going to take those assets to production. Their only job is to acquire assets and hold on to them. They have a low burn rate because they're simply just holding on to the gold asset. But let's say you have 10 million ounces of gold resources and gold goes to 1,500. That company will probably double as a percentage because the asset that they own is going up, that leverage to the upside. So I love gold optionality plays right now. Not a big, I don't buy large caps. Gold mining in general is a horrible business to invest in. If you're going to buy a large cap, buy like a Wheaton Precious Metals or a Franco-Nevada, a royalty play. Or if you really want to buy a great value play right now, Sprott. Not only can you buy Sprott, who has massive exposure to both the investment side of gold and their clients who will make more money. And I assume they would get a lot more clients in the gold market as well. Consider that. But Sprott is a company with a lot of assets, no debt, and they pay about a 4.5% to 5% dividend. Where in the hell are you going to go in the resource sector and get a dividend? And I think when there's gold mania, I think that stock it's not going to be a penny stock. It's not a junior stock that's going to go up, 100 times. But look, you're probably you're putting your money with probably the safest group in the resource sector, and your upside, you absolutely have 10 to 20 times upside with them.
Okay, Sprout. I'm gonna write that down. Double T, right at the end.
Yeah.
I hear you. Daniel, before we wrap up, could you let our listeners know where they can find out more about you and your work?
Absolutely. If you go to futuremoneytrends.com, you can subscribe free to my weekly wealth digest, or go to futuremoneytrends.com/gold. You can download our special report on the gold market. But I'm definitely excited about the precious metals market right now. And if you want to see what I'm investing in, you can subscribe. And about a week before I make those investments, I'll let everybody know, look, I'm going to take a position in this company. And, I like to invest with my subscribers, not before them and not after them. I like to tell them, hey, I'm going to invest in this, and that's what I do. And I only own the stocks that I recommend in my letter.
Daniel, thank you for coming on the show again, and it was a real pleasure speaking with you, and we thank you for your time.
Hey, thank you.
That was Daniel Ameduri from Future Money Trends. To find out more about Daniel's work, please visit his website, futuremoneytrends.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content, and do also check out the SBTV podcast on iTunes and Spotify.